Hello and welcome. Today, we are diving into something that so many newcomers to the US run into. How in the world do you build a credit history when you're starting from absolute zero? It's a huge step towards getting your financial feet on the ground, and we're going to break down exactly how it's done. Okay, let's get into it.
First up, we're going to define the core problem, what we're calling the wall of credit invisibility. Then we'll pop the hood and see how the US credit engine actually works. From there, we'll zero in on a key tool, the credit builder loan. After that, we'll put together a whole toolkit of strategies. And finally, we'll talk about the long game, what all this work is really for.
All right, so let's start with that first big hurdle. You can't really solve a problem until you understand what you're up against. This is the question that just drives so many people crazy. I mean, you could have a flawless financial record for decades back home, but then you get to the US and poof, it's gone. Why? Well, it's simple, but super frustrating. The US credit system is basically a closed loop. Lenders here really only trust data from the three big US credit bureaus.
And this is a really important distinction. The issue isn't that you have a bad reputation, it's that you have no reputation at all. You're financially invisible. To a lender in the US, it's like you're a ghost. They can't see your history, so they have no idea if you're a safe bet or huge risk. That's the problem we have to solve.
And this isn't just some abstract concept. Being a credit ghost has real, everyday consequences. It can make everything harder, from renting an apartment to getting a new phone plan without a massive deposit. Forget about getting a decent car loan, a normal credit card. Even your insurance rates can be higher. It makes life more complicated and definitely more expensive.
Okay, so how do we knock down that wall of invisibility? First, we need to understand the machine we're dealing with. We got to figure out how this US credit engine is built. So, the heart of this whole thing is the credit score. Just think of it as a grade for how reliable you are with money boiled down into one number. The whole point of building credit is to create a track record that these scoring models can use to calculate that number. Basically, you're trying to prove you're a trustworthy person to lend to. And, a score over 700 is usually what you're aiming for. And here it is, the secret recipe. This is what makes up a FICO score, which, by the way, is used by almost all the top lenders. And as you can see, not all ingredients are equal. Just look at the size of those first two chunks, your payment history and how much you owe. Together, that's nearly 2/3 of your entire score. It's huge. So let's just focus on that biggest piece of the pie for a second, 35%. A massive part of your score comes down to one simple thing, your payment history. Do you pay your bills on time every single time? That is the number one question you need to answer for the credit bureaus. So, logically, to build a score from nothing, you have to create a history of on-time payments. Which, of course, brings us to a classic chicken and egg problem. How do you build a payment history if no one will give you credit to begin with? It sounds impossible, right? But there's actually a special tool designed to solve this exact paradox. A credit builder loan is not what you probably think of when you hear the word loan. You don't just get a bunch of cash to go spend. Nope. It's better to think of it like a flight simulator for your finances. It's engineered for one job and one job only, to help you create that positive payment history that makes up that giant 35% of your score. Let's walk through how it works. Step 1, it starts out simply enough. You apply for a small loan, somewhere between, say, $300 and $1,000. These are designed specifically for people with no credit. The amount of money isn't really the point here. It's all about the process. Okay, now here's where it gets kind of weird, but it's the most important part. Instead of handing you the cash, the lender puts it into a locked savings account. You can't touch it. This totally removes their risk, which is exactly why they can offer it to someone with zero credit history. Next, you start making small, regular monthly payments to pay off the loan, the one that's just sitting there in that locked account. In a way, you're just paying yourself back.
But more importantly, you're proving you can handle a consistent payment schedule. And this is the magic. This is the whole reason you're doing this. Every single on-time payment you make gets reported to Experian, Equifax, and TransUnion. You are literally actively creating the data for that huge 35% payment history category. This is how you stop being invisible. And then, once you've made all your payments, the term is over and that locked account is finally opened up and the money is yours to keep. So think about it. You've not only built a foundation for your credit history, you also basically forced yourself to save a few $100. It's a win-win.
So, a credit builder loan is a fantastic starting point, but it's just one tool. The smartest strategy is to use a few different tools all working together.
So let's compare that loan to its closest cousin, the secured credit card. With a secured card, you put down a cash deposit, like $300, and that becomes your credit limit. You use it for small things like gas or groceries, and you pay it off every month. This helps you build a history with what's called revolving credit. The credit builder loan builds installment loan history. Getting a mix of both looks really good. And beyond those two big ones, you've got other moves you can make. If you know someone with great credit who trusts you, becoming an authorized user on their card can give you a nice boost. There are even services now that let you report your rent and utility payments. And some lending circles, which are kind of like community savings clubs, now report to the credit bureaus too. So you've got the tools, you've got the strategy, but what does the timeline look like and what's the ultimate goal of all this anyway? Okay, let's be real. This takes some patience. After about 3 to 6 months of on-time payments being reported, your very first credit score can pop up. You officially exist in the system. After about a year or so of keeping it up, you can see some really big improvements. And once you hit that 2-year mark, you're building the kind of solid history that opens doors to the big stuff, like good car loans and even mortgages. And this quote just nails it. There are no shortcuts here. The whole system is designed to reward one thing: consistency over time. Every on-time payment is one more brick in the wall, and every single one matters. And let's be super clear. The goal isn't just to get a high score to brag about. That number, it's a key. It's the key that can unlock the door to a mortgage for your family's home, a loan to start your own business, and really a more secure and stable financial life in a new country. Look, once you understand how this system works, you go from being invisible to being in control. The path is there, the tools are available, and now you know the strategy. The only question left is the one that you get to answer.